Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a higher but still indecisive spinning top yesterday. There was also a second bullish white soldier. The market tried to continue its rise this week after late last week's dip, closing again over the April 2020 low at 107.25, piercing the bright red breached upper time, currently 107.46, and rising up to just short of the May 2020 low at 107.66 before failing to close over either. This May 2020 low is interesting, as it's the gateway to all the congestion of the moving averages overhead, the stretch from 107.71 to 108.04, which is actually quite a close area. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting, as it attempted to be a transition pattern for a move up and out of the bright red bearish shift pitchfork in the first place. Admittedly, the downside primary target for a break lower out of the pattern, well, that's already been achieved, though it still leaves a much harder secondary target X below, down at 106 even. Personally, I have strong doubts right now about achieving that level. I'll think more about that in the next few days. I'd now like to review a pair of ideas I'd floated earlier. Firstly, we had a bow tie formation 4 weeks ago of the short moving average, currently 108.04, the long moving average, currently 107.89, and the short medium moving average, and that's currently at 107.71. Now, setting aside the fact that the moving averages went in and out of the bow tie formation in the wrong order, I'd earlier been more concerned by the lack of response of the short medium moving average and the long moving average. They are both flatlining, which leaves the short moving average as the driver in this pattern, and that was, as I'd previously stated, not satisfactory. Added to this is that all we have seen this week is the congregation together of all the moving averages in a narrow range, and I'm even more troubled. Nevertheless, the theory suggests that between 15 to 20 sessions after crossover, we may see a period of volatility and possibly a move start. So that has been between the 12th and the 19th of June, and today is the last day of that window. Secondly, 3 weeks ago we had a weekly key reversal down. For most of the subsequent week, it looked like a rejection of that idea with new recent highs. However, by the end of that week, prices almost ended in an immediate countering weekly key reversal down. So a big caution that we might, after all, be starting, as I say, after all, some sort of follow-on lower from that weekly key reversal down. So far today, well, not much. A dip to the April 2020 low, but also capped by that overhead bright red upper time. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, but also a higher, if still indecisive, spinning top. The market closed for a second consecutive time over the combination of the 50% Fibonacci line of the June 2016 to September 22 move and the September 2020 low, both at 126.99. The market dipped down to the congestion at 126.72 and was capped by a lesser Fibonacci line at 127.21. Now, further overhead is the omnipresent bright red highlighted July 2021 to date breached downtrend, currently at 127.43. Whilst below we have the flatlining mauve highlighted medium moving average, currently 126.37, as well as the short medium moving average, currently 126.17, and the 50% Fibonacci line, the July to October 2023 move at 125.90. Late last week, prices broke out below the dark blue highlighted April to early June bull channel. Now, I had thought of looking at this pattern as an ascending wedge pattern, but I'll leave it as a bull channel for now. So far today, well, a further move higher approaching the breach, the bright red downtrend, but that's all it's doing at the moment, just approaching. Euro sterling. High, but still indecisive doji cross yesterday, seemingly capped by the April 2021 low at 84.70. From early May until last week, prices had formed a large bearish halfway hesitation, with potential down to 84.30. This was achieved last week. Additionally, I previously pointed out how the break below the purple highlighted lower trend line, currently at 85.54, of the late January to late May expanding wedge pattern gave a primary target X in the 84.51 zone with a secondary hard reach target X1 down in the 84.13 zone. These two targets were also reached last week. So far today, another higher open, but this time a straight move lower and looking like a combined bearish engulfing pattern and bearish opening black mirror bozo right now. US dollar against the Japanese yen. A higher but indecisive spinning top yesterday was also a fourth bullish white soldier. It was the highest close since late April. The top side was capped by the bright red middle time, currently at 158.22, of the July to December 2023 bullish Andrews pitchfork, whilst below we have the dark blue lower time, currently at 156.39, of the mid-March to early May bullish Andrews pitchfork. As I said last week, and I quote, I have a suspicion that we might just be running between these two colourful tines for the immediate future, end of quote. Further below is the green highlighted short medium moving average, currently 155.60, whilst topside we have the May 1990 high at 159.61. So far today, not much, well within yesterday's range. US dollar against the CNH, the offshore Chinese yuan. A third consecutive indecisive pattern yesterday. Yeah, a third one. This time an indecisive spinning top. It has not stopped the market testing higher, but it has not sustained the move up with any significant higher closes not being available. Below we have the short medium moving average, currently at 724.95, with the dark blue highlighted upper trend line extension to the January to April ascending triangle, currently 724.11, a little below that. Interestingly, all this action is still just within, if only on a closing basis, the previously mentioned approximate 724 to 727 congestion area. So far today, well, yet another further attempt higher, but seemingly capped for now by an extension to that 724 to 727 congestion. There's an extension of it a little bit higher up, I think, at the moment. US dollar against the Mexican peso. A bearish engulfing pattern yesterday as the cap on the market, however riddled with holes it might be, of the dark blue upper time, currently at 1868.51, of the early April to mid-May bullish Andrews pitchfork, along with perhaps now the February 2020 low at 1851.71. Together they seem to be reasserting their force on top of this market. It's time now to see and consider what the next pattern will be, and for this I would like to put the following idea in front of you. We have the possibility of looking at the action from 2022 today as a potentially huge double bottom pattern idea. We are now, after the rise during May and now June, close to the neckline area of around the February 2020 low at 1851.71 for such a pattern. As this is something I saw on my monthly charts, I would appreciate at the very least a monthly closes, consecutive monthly closes, so it's not an immediate pattern, but consecutive monthly closes over this level of 1851.71 to confirm such a move higher. Thus, with a week and a bit to go until the end of June, let's keep an eye on where prices close on the 28th of June. Well, so far today, not much. A slightly higher piece of action, though we have seen lower levels tested as well, but overall really not doing very much at all.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.